Hello dear traders, I'm Anna Kasatkina. You're watching weekly review of financial markets on Insta TV. Last Friday, the US stock market suffered the biggest weekly losses in months due to a decline in shares of biotech and commodity companies on the heels of a slump in China's economy. Over the past week, investors sold stocks as disappointing earnings reports from Apple, Caterpillar and IBM, as well as a dramatic sell-off in commodities, brought back concerns over a slowing growth in the global economy. The Nasdaq Composite on Friday plummeted by 1.1%, closing the week with a 2.3% weekly loss, which was the biggest from March. The tech-heavy index retreated from its record closing level set on Monday. The Dow Jones Industrial Average Index fell by 0.9% during the Friday session. The blue chip index recorded a 2.9% weekly loss, the lowest mark since January. The S&P 500 index went down by 1.1% on Friday. The benchmark index posted a 2.2% weekly decline, which was the steepest since March. Among the S&P 500 sectors, material stocks were hit the hardest, with the sector falling 5.5% over the week, while the energy sector booked a 4.1% loss. The Market Economics Purchasing Managers Index for China's manufacturing sector fell to a 15-month low of 48.2 in July from 49.4 in the previous month, becoming a bitter surprise for economists. Investors also grappled with a housing report that showed sales of new single-family homes in the U.S. reduced to the slowest pace in 7 months. The indicator shrank by 6.8% in June to 482,000 units. The May reading was revised downwards from a 7-year high of 546,000 to 517,000. Analysts predicted an increase of 0.3% to 548,000. Shares of Amazon.com Incorporated jumped as much as 19% to hit an intraday high. The company surprised investors by reporting an unexpected profit along with its sharp sales gains. However, by the end of the session, it gave up half the gains to close up 9.8%. The Seattle online retailers reported a second-quarter profit of $92 million, or 19 cents a share, up from a year-ago loss of $126 million, or 27 cents per share. Sales rose by a better-than-expected 20% to $23.18 billion. At the same time, Biogen's shares dropped by 22% after the company reported weaker than anticipated second-quarter earnings and cut its 2015 revenue outlook. It was the stock's largest one-day percentage drop since 2008. The drug maker said it now expects its revenue to grow by 6 to 8% in 2015, roughly half the rate of the 14 to 16% growth it had forecast previously. Per share earnings are expected to be at $14.25 to $14.70, down from prior estimates of $15.45 to $15.85 per share. And this was the weekly review of financial markets prepared for you by Insta TV team. Thank you and goodbye.